Here we will talk about trading account. Let's go through its definition first. Now, let's make out some important points. Here, as we can see, ascertaining gross profit or gross loss is the basic rationale to prepare this account. By gross profit or gross loss, we mean profit or loss associated with the production of goods. Thirdly, this account records all the direct expenses and direct incomes. By direct expenses and incomes, we mean all those expenses and incomes that are related to manufacturing and production of goods. Now, let's visit a manufacturing unit. Here, this is a factory where actual production takes place. You can see heavy machinery and workers operating them. There are numerous expenses incurred during production. For example, electricity used, fuel such as petrol, diesel, etc., daily wages paid to the workers and casual laborers, carriage charges to transport raw materials into this unit, purchases, etc. Collectively, all such expenses are termed as direct expenses. These are called direct as they are directly linked to the production. Similarly, there are a few receipts or incomes that are related to production. For example, sale receipts. Such receipts are regarded as direct incomes. Now, let's have a look at the format. Here it is. On the debit side, we begin with the opening stock. It is the stock of all goods, whether finished, semi-finished or raw materials. After this, we have net purchases. This is shown as purchases minus purchases return. Further, we deduct these kinds of goods-related adjustments like drawings in form of goods by the proprietor, goods distributed as free samples and charity. Thereafter, we record all the direct expenses such as carriage, freight, factory lighting, fuel, wages, import duty, and so on. Moving on to the credit side, we first have sales. It includes both credit as well as cash sales. From this, we deduct sales return and the final amount is shown in the outer column like this. Lastly, we record closing stock here. Regarding closing stock, a few important points are worth noting. First, as per the principle of conservatism, closing stock is recorded with the lower of the two, that is, the market price and the cost price. That is, if market price is lower than the cost price, then closing stock is recorded at the market price and vice versa. Secondly, closing stock is generally given outside the trial balance in the question. So, in those cases, we record it on the credit side of the trading account. However, if it is given inside the trial balance, then it is not recorded in the trading account. Since it implies that closing stock is already adjusted in the purchases. We shall tackle this point later on. As of now, let's get back to the trading account. Now here we will tally both the sides. If in case the total of the debit side exceeds that of the credit side, then the balancing figure is shown on the credit side as gross loss. Otherwise, we have gross profit that is shown here. Further, these are transferred to the opposite sides when we prepare P&L account like this.